Hi, everyone. This is Dmitry from Golden Ticket. Welcome to another trading session. In today's video, I will cover essentially a recap. We're going to look over the simple moving averages. We're going to look over the exponential moving averages, how to day trade, how to swing trade, and how we do what we do. And when I say how we do what we do, I'm talking about things like how do we get members to make, you know, good profits? So that's what I'm going to do a recap of. First of all, Goldman Sachs is going to do really, really well tomorrow. I mean, it did great today. It's up $14.87. So we have GS, IMXI, and AA. I'm going to look at all three. And, just to make it better, we're going to pretend that we don't know anything. So, like I said, this is going to be a recap. First thing you want to do, make sure when you're setting up your chart, you go and set up your time axis on Thinkorswim at least. That the expansion area of 3. Make sure that everything is filled in. Make sure, like right here, you don't want to have those empty candles. It's just, yeah. So, okay, for that one, then we're going to go to studies. And by the way, it's the same thing on like Webull. So if on Webull, you just, add indicators, so, studies, indicators, but whatever, it still works. First thing you want to add is MACD. Why? Because that shows you not only volume, but what's happening. And make sure it's a histogram. Second one you want to add, RSI, Relative Strength Index. Third thing you want to add, and by the way, these are all on the lower section. Lower is the MFI. This is like the most basic setup you could go for. Money flow index. Now we want to go to the top. We're going to add 2 simple moving averages. We're going to add 1 exponential. First SMA, we want to be a 10, not a 9. I know you're going to see a lot of crap on YouTube about the 9. Trust me, if you follow it, you're going to lose money. But, if you want to test me, go ahead, be my guest. Second one, you want to make a 40. And by the way, the 10 and the 40 is for day trading. So let's make this straight right now. $10 and $40 is day trading. If you want to swing trade, then you want 5,200 is swing trade. So 1040 day trade, 5,200 swing trade. And that, of course, applies to your moving averages, which I will, recap in a little bit. When it comes to any trade, you want to always, no matter what trade it is, watch your 200. Very important. The rest we'll get to in a second. So we have the 10, we have the 40, and for our EMA, like I just said, we're going to go for the 200. See how much better it looks? But we have to change the colors. I don't, like, regular colors, they just don't work for me. So this one we want to be green, because when the green is on top, we know we're doing good. And this one we want to be red, because when the red is on top, we know we're doing bad. And for the 200, we'll make it purple or cyan, I guess. Now let's take a look. And this is on a day trading point of view. Every time that green is approaching the red, you guys could see that the stock price is going up. Every time that green begins to curve down, the stock price goes down. Coincidence? No, this is what these indicators are for. Then, look at the MACD. As the stock price goes up, the MACD is bright green. Once it starts to turn darker green, I mean, it's pretty much what it's made to do. It's an indicator that something's about to happen with the stock price. It's going to make a drop. And right here, it dropped. Same thing over here. See? But if you look right here, the bright red ends and it goes to dark red. And the stock price once again begins to come up. However, do not forget what I said right before we started this. The 200 EMA. This. You see how it bounced off of it? We have, let's see how many bounce points. Annotate, draw. Boom. So, 1, 2, 3, 4. We can see why the 200 EMA is so important. Because every time that price hits, that little border, it bounces. Boom, boom, boom. And you can always tell by this right here, the money flow. Now, the difference between the relative strength index and the money flow index is the fact that the relative strength index, it primarily measures price, while the money flow index does the same thing, but it takes volume into account. Now, you have to keep in mind that while these indicators are doing their job, they're also a little delayed. So look at this right here. At 9:53 is when the MFI, money flow index, let's say it essentially peaked. Because for me, this is a peak. I don't wait for it to hit this line. But the price kept going up. And the reason for that is because it is delayed. The volume was going up and people are pouring more money into it. But that doesn't mean that it's going to have an instant reaction. It takes time. If you put it like logistically, you send your order, like if you're using TD, Ameritrade, Webull, I hate to say it, but Robinhood, because Robinhood is a piece of shit. But if you think about it, they are none of those three go directly to the stock market. They use clearing houses, such as like Apex. So they're sending your order to the clearinghouse. That clearinghouse is sending it to somebody on the stock market on the floor. Then they're sending it back to the clearinghouse and then back to you. So naturally, most of these things have a delay unless you're using a brokerage, for example, like TradeStation. Because TradeStation, you go directly to the floor. There is no middleman. So always keep that in mind. All indicators are going to be a little bit delayed. So don't be surprised. Now over here, if you take a look at the RSI, and this is where we go into the RSI chapter. The RSI broke support. But a lot, some of you might be asking, but I thought this was the support. The reason why is every time a stock, just for that day, breaks a new high, it establishes a new support and resistance. So that is why over here, the RSI looks like it broke support. And over here, the RSI ripped through resistance. And the reason why I want to point that out is because if you, for example, one second, let me clear these drawings. If you want to draw support and resistance lines with like no help from any program, without help from us, then you need to understand these concepts. And while I'm not going to go into full detail, but if say from 1400 to 1600, which is from 2 to 4 p.m., I wanted to establish a support. My first support, because you always remember you have two supports and two resistance. It will be right here. That would be my first support. When drawings. And my second will be right here. My two resistances. Top one will be right here. Second one will be right here. So now we've established two support and two resistance. And we now understand what the RSI is. It's just measuring money. And we also understand what the MFI is, money flow index. It's money plus volume. Pretty simple. MACD is kind of like measuring the volume, but it's showing you, and I'm saying this in like the most basic terms. it's showing you where the price is going. When the bars get, what's that? Let me change this right here. When the bars get bright green, that means the volume and the price, so basically the trend essentially is going up. When they get dark, trend is going down. And you could see it throughout, every pattern here. Now, let's get down to what really matters. And that is our SMAs. Because I can honestly say that the SMAs for day trading are the most important things you're going to have. When you see the green cross over the red, right there, you know the price is going up. It's visible. I mean, if you have eyes, you could see it. When the green goes below the red, why SMA over EMA? It's a good question. It's a very good question. The difference between simple moving average and exponential moving average is the exponential moving average, it places more weight on recent price. And what we want are stability, like, we want stable stocks, stable securities. So we don't want to look at recent price, because if it was just pumped, then you don't want to play it. You're taking a huge risk. So we want stability. And so, like, that's why I always say SMA, for me, the S always stands for stability. I don't want my lines placed on, well, for the 10 and 40 for day trading. I don't want it placed on, or more heavily placed on, recent prices. I want to see long term. And EMA, it places more weight on recent price. So if a price was inflated or pumped and dumped or whatever, that EMA, well, if you had the EMA instead of the SMA for the crossovers, it would change. I'll show you guys an example. Watch this. So with the simple moving averages, see right here, the red, you see the green. And the timeline is 12:57. Don't forget, the timeline was 12:57. Now it's 12 right here. The crossover is 1300 hours. So basically 1 o'clock. Now, it may sound silly, but 3 minutes, say on a stock like Amazon, it could be a $15 difference, $20 difference. And say you have options and you're a day trader, that's a lot of money. So that is why we use the simple moving average instead of the exponential moving average. I'm gonna set this back up to what we had before. But just like while I'm setting this up, to summarize, exponential moving average places more weight on recent price movement rather than the simple moving average where it just looks back to the amount of days you set it to. So I'm setting this one right now to 40 days. That's what the length is. And we have our exponential, which is cyan, 200 days. MACD, which I already explained. RSI, I already explained. MFI, I already explained. Boom, apply. Now we're going to clear the drawings from here because we are about to transition from day trading to swing trading. So we can see now here again, 1258, 1257, it crosses over while the EMA had us at 1 o'clock. That's a 3-minute difference. And believe me, when you're day trading in 3 minutes, you could be done. Most day traders do not trade past, I would say, 10 a.m., maybe 10:30. The ones that do, they eventually lose. Sorry to say it, guys. That's the way it is. And since we're recording, once again, my name is Dmitry, and my website is gticket.co if you're watching this on YouTube. And I just want to call out, as I always do, always, pieces of like this. They charge you $100 a month. And by the way, half of these right here, I was the one that started them because they didn't have options before me. They didn't have nothing before me. All they were penny, penny stock pumping pieces of shit. And the worst thing is that they don't care that their clients are falling into debt. And that's why I do this every time. Because I actually have a conscience. That's why I do these Zooms. But prior to me, I don't know if you could check like, the history for Discord, but look at even this, Benzinga News. Could you guys please show me where Benzinga has a Discord bot? It doesn't exist. What this right here is a reprogrammed version of this. But they called it Benzinga. You know why? Because Benzinga costs $120 a month. So I wanted to point out how important it is to make sure that you go and do your research properly. Do not ever rely on this bot right here, Gold News. It's my bot, and I'm telling you, don't rely on it. You know why? Because the best bot in the world is this one. I'll show you in a second. That's it. You want to get easy finance news? The easiest one is finance. I could see right now all the futures. So make sure you guys, this is your money. Literally, your money. You're not gonna, like this, you're not gonna just throw it out. Do research. If I send out an alert to buy something, then prior to buying, what you do is you pull the chart. And you're like, okay, I send out an alert right here. And you see it's dipping. Don't just buy. Wait and see where it goes, because I could send out an alert right here. But you see this. So you want to get that 3-candle confirmation that I always talk about. I'm hoping that I get through at least to somebody, whether it's live or on YouTube. But guys, don't stop throwing away your money. Let's lower that statistic, because they say 96% of all new traders fail. So let's lower that statistic. Now, on to swing trading. It's pretty much the same exact thing, except we're going to change our chart. And by the way, some people, may have different opinions. Some people, even for day trading, like to do a 5-minute chart, but I like 1 minute because I like to see it move out of, like second by second. I'm very on top of things. So we're going to go to 1 year, 1 day. And we're going to change studies from 10 and 40 to, and this is, by the way, when it comes to swing trading, I'm talking about like 7 to 14 days. 20. And 50. Now let's zoom in. Okay. And as you can see, the green crosses over the red. Oh my God, it's a miracle. Price goes up. Green goes below. Price goes down. And, you could look over every chart for any stock symbol. It's always going to be the same exact thing. Now, new indicator. And my favorite one. Okay, we're going to remove these because I want to show you guys just how accurate this is, except we have to change from 1.5 to 2.25. Always make sure you do that. Every time on swing trading, it hits that red band, boom. 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 I could keep doing this all day long. I don't even need to look at the MACD or RSI or MFI because I literally back tested this shit 20 years. You want to do day trading? No problem. Boom, 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 boom. Should I keep going? No, but guys, the Keltner channels should be your best friend. I should be able to wake you up in the middle of the night and ask you, what is the appropriate setting for Keltner channels? And you should say 2.25. If you use Bollinger Bands, good. You know, I'm not hating, but this right here makes it seem like child's play. And, you know, for anyone watching this right now, and for anyone watching this on YouTube, I'm gonna give it, you know, today is October 15th, so I'll give it till October 20th. If anyone could backtest Bollinger Bands versus Keltner channels 2.25 setting and show that the backtest shows higher win rates for Bollinger Bands instead of Keltner, I will personally PayPal you $10,000. I've done it. I've looked at it, but you guys could backtest, you know, Bollinger Bands versus Keltner channels, and believe me, Keltner will always prove successful. So if you are not familiar with all these indicators, we have tons of videos on our YouTube. My name is Dmitry. You know, thank you guys for attending today. If you have any questions, feel free to ask me on Discord. If you're not on our Discord and you're watching this on YouTube, feel free to go to our website. The link is in the description. And feel free to follow us. We do Friday Zooms every week. If you guys want, like charting help, then please feel free to reach out to Ash. Ash will, you know, turn you into a chart expert. And if you want one-on-one help with Ash, then it's always available on our website. If you want one-on-one help with me, also available on our website. And if you want a VIP SMS alerts, then please feel free to sign up. All those, you know, funds go to paying for bills to keep the company open. But once again, guys, thank you for attending. I hope I was able to teach you something new. And I hope to see you next week. And don't forget to like, subscribe, turn on alerts so you can get our future videos. And I will see you guys on Discord. Thank you for tuning in tonight. Before you go, here are 3 free ways that we can help you become a more profitable trader. You can join our Discord channel. Also, subscribe to our YouTube channel for all the latest videos and like this video. Thanks everybody for watching. More videos to come. We usually do them once a week, and I will see you later.